mortgage bomb, how bad is it going to be for people?
I think it's going to be exacerbated. I mean, we've all noticed interest rates are going up, and they've got to go up to try and keep inflation down. Though I looked at the previous piece, absolutely right. The magic money tree printing of quantitative easing during...
Do you remember modern monetary theory? This is what they were all talking about.
Yeah, well, I'm afraid to say I still remember Tim Congdon. I think he's great. The old-fashioned Thatcherist monetary economics, for me, are right.
Yeah.
But if we think about mortgages, of course, interest rates go up, mortgage rates go up. But the Bank of England, to my mind, is exacerbating that problem. Mm-hmm. Because they are, at the same time, increasing the amount of capital that banks have to hold against mortgages. Now, that, in layman's terms, means it becomes more expensive for a bank to give you a mortgage.
And therefore, the rate they offer to the consumer becomes less competitive.
Exactly. So the banks have got to put more money aside to put mortgages out there. It's particularly the case in buy-to-let. The amount that the banks have got to put there is going through the roof. And so that then becomes a doom spiral, in my opinion, because lots and lots of people cannot afford their mortgage, will not be able to afford their mortgage, particularly when their fixes come off. Yeah. And then they have to sell their house, then the price goes down, and then the whole thing goes into a bad day.
Question for you, Eddie. You've been in and around government quite a bit for the last few years.
Never in.
No, but you've been...
like you, never in.
No, but you've been close and you've been advising.
Yes.
One of the points about Brexit, when it came to money, financial markets, the Bank of England, is that freed from the European Union, we were going to become more competitive. Yes. What you're saying is the Bank of England has actually made our mortgage market less competitive.
Exactly.
Why?
It's possibly a scared reaction to problems like Credit Suisse. Now, Credit Suisse ticked all the boxes, but it still had that loss of confidence and went bust. On the one hand. Secondly, what I'm saying, if I can perhaps move on to Brexit.
Yeah.
Brexit for the EU in financial services, and we don't talk about financial services very much.
Despite the fact it's our biggest industry.
Right. So the trade surplus, if I can call it that, for financial services has gone up from $70 billion pre-Brexit to $77 billion. So it's gone up 10%. Jolly good. It's massive export earnings.
Despite all the scare stories that we heard.
Absolutely. Now, where's all that growth come from, however? It's from Singapore and Switzerland and the US and Australia, trading with non-EU countries. And the financial services trade with the EU has gone down. And it's been lose-lose. So the EU has lost out on financial services trading with the UK, and the UK has lost out on financial services trading with the EU, at the same time as it's benefited from trading with everybody else.
But generally, the industry is relatively healthy, as you say. It's done better than all the scaremonger has said. But it just strikes me that the bank have panicked, have made things more difficult when actually we had the freedom to do the opposite. When you look at
it's all the rules, it's all those EU-imposed rules, that make it almost impossible to apply for a mortgage. I mean, I'm not financially unsophisticated, but it was doing an A-level to get a mortgage.
Big picture. We've got inflation running at 8.7%. And growth, I mean, all right, the Eurozone's in recession. We're not in recession, and that perhaps explains why their inflation figure is a bit lower. They also don't have green taxes quite as high as we do, which does make quite a bit of difference. But economic growth in this country is pretty much bouncing along the bottom of zero. Back in the 70s, this was called stagflation. Is that where we are?
It is indeed. And part of that, again, has been sorry to talk about pensions for a second, but over the last 15 years, British pension funds, which used to be great supporters of British industry, used to own a lot of shares in Britain, have been forced by regulation and by rules to sell their equities and buy gilts. And they were forced to buy gilts when the rate of interest you could get on the gilt was virtually zero, was negative after inflation. And they put money after money after money. And then it all came home to roost. They lost £550 billion in September, October last year. And that is money that could have been put to good work by the companies that sponsor the pension funds to invest into the next generation of modular reactors or jet engines or software or whatever the hell it was, and instead was put into a highly unproductive, gilt-edged investment. And so if we can reform the way that the pension funds work, and put money to work into productive assets, equities, private equity, infrastructure, and so on, then we can actually reverse that growth cycle.
But that's all well and good, Eddie. That's all well and good. But we've had 13 years of Conservative government.
Yep.
The Brexit vote was 7 years ago tomorrow.
Yeah.
And frankly, what you're saying is they and the Bank of England have mismanaged the whole of this, I mean, really badly.
Yes, there's been in my view, a misplaced view of risk and a misplaced view of reward. So you think, oh, gilt's safe. A gilt is never safe if the market has been rigged by the central banks. And so people were lured into a sense of false security to invest into safe investments that have turned out to be anything but safe.
Final thought, will Rishi meet his inflation target for the end of the year?
Halving inflation, is that the theory?
Yeah.
And what numbers does that give us?
Well, it would take us down to about 3% from when he made the pledge.
That's quite hard work.
I love it. Edi Truell, thank you very much indeed. And there we are, folks. I think you've learned, I hope you've learned, over the course of the last quarter of an hour or so, just how badly mismanaged the economy has been. And this under, supposedly, a free market Conservative government. I have no doubt Labour will be even worse.